Okay, so you're looking to get the lowdown on CDs, right? We're going to take a deep dive into certificates of deposit today. You've seen some of the latest info out there, like that recent article with the best CD rates for March 2025, right?
Yeah, exactly.
We're on the same page. Perfect. So we're cutting through the noise and giving you what you need to know about CDs right now so you can figure out if they're right for
So
you.
if you want to learn quickly but really get it without it being too much,
Exactly.
we're going to unpack the current CD scene.
Yeah,
What's on offer and is it worth your time right now?
right now.
Yeah. Okay, let's get started.
So you probably already know a bit about CDs. Basically, it's where you park your cash in an account for a set time.
Right.
That's the term, right? And they pay you a fixed interest rate.
Exactly.
So it's a trade-off. They hold on to your money, you get a guaranteed return. Simple as that.
Yep.
The info we're looking at is super fresh, too. All verified March 21st, 2025. Like, as up-to-date as it gets.
Super important right now, with what's happening in the economy.
Yeah.
Our sources point out that the Federal Reserve, the U.S. Central Bank, they decided to hold rates steady at their March 19th meeting.
Uh-huh.
They actually lowered rates a couple times late last year. The big thing is CD rates usually follow what the Fed does. So if they lower rates again,
Right.
you'll likely see CD rates drop too.
Mm.
This kind of economic backdrop, it really frames how we should look at CD offers today.
Makes sense.
Yeah.
Okay, so let's jump into some of the top rates available right now.
Let's do it.
The one that stands out is Mountain America Credit Union. They're offering 5.00% APY for an 18-month term.
Pretty good return.
It is, yeah. And it's not just them. You've got Inova Federal Credit Union. They've got 4.65%, much shorter term than
Oh, shorter.
5-month term. And DR Bank, they match that 4.65% on a 6-month CD. So you can see a pattern emerging here, can't you?
For sure.
Even with the top offers, you're trading off between a higher percentage and, how long you're locking up your funds for.
Absolutely. Your own time horizon becomes super important.
Mm-hmm.
I mean, if you think you might need the money soon, that 5-month option from Inova, even with a slightly lower APY, might be better for you. On the other hand, if you can let it sit a while and really maximize that return, that 18-month CD looks pretty tempting.
Yeah, and it's not all about the rate and term, is it? You've also got to think about minimum deposits.
Right.
They vary a lot. Vibrant Credit Union, for example, they have a super low $5 minimum,
Wow.
which is great if you're just starting to save, or want to put a small amount away. But then you've got places like Sun Canyon Bank and My eBank. They want $5,000 minimum.
Yeah.
That's a huge difference. You got to factor that in depending on your savings situation.
It all boils down to, what works for you.
Yeah.
Smaller amount to save, those lower minimums are key, got a larger sum, those higher minimums aren't such a big deal.
Right.
Then you can prioritize that APY.
Yeah, from a solid institution, of course.
Mm.
Now, one thing that people might not think about right away, but it's super important, is early withdrawal penalties. If something unexpected happens and you need your money back,
Yeah.
they can really eat into your returns.
Yeah.
Our sources talk about everything, from losing a few months' worth of interest all the way up to forfeiting all of it.
Wow.
And then there's community-wide Federal Credit Union. They have like a complex formula for their penalties.
That's tricky.
Yeah, red flag, baby.
It definitely makes you think, the whole point of a CD is that predictable return
Right.
over a set time.
Yeah.
Early withdrawal penalties are how they make sure you stick to the deal.
Right.
But if the penalty's complicated, it adds uncertainty. Harder to know how much it'll cost you if you need your money early. So a big question for you is, how sure are you that you won't need that money before the term is up?
That's a good point. Yeah. So all these options, why are CD rates even looking good right now? We touched on the Fed's moves earlier.
Right. Remember 2022, 2023,
Uh-huh.
the Fed was raising rates like crazy,
Yeah.
trying to fight inflation. And that pushed CD rates up a lot. They actually peaked in 2023. Now, the Fed's easing up, but CD rates are still, many are above 4.50% on different terms, way higher than a few years ago. So here's the thing. You could lock in these higher rates now.
And our source is pretty blunt about it.
Yeah.
They say, so if you are debating whether to buy a CD or not, don't wait. That's pretty strong advice.
It is strong, and it really drives home the point. If the Fed keeps lowering rates, new CD APYs will probably drop. So locking in a higher rate now, you're basically safeguarding against future dips for the whole term of your CD.
Yeah, smart. Okay, so we've seen some of the best rates and why they might be worth a look right now, but let's zoom out a little.
Yeah.
What are the basic elements of any CD? Our sources break it down into 4 key parts.
Okay.
You've got the fixed interest rate, the term, how long you commit for, the principal, the amount you put in initially, and the financial institution, where you open the CD.
Makes sense.
So understanding these, it's crucial. That fixed interest rate, that's your predictability. The term is how long your money's tied up. The principal is what your interest is based on. And the institution, well, we've seen they impact everything. The interest rates, the minimum deposits, those early withdrawal penalties.
Totally.
Now, there's a subtle but important difference between the interest rate and the APY, the annual percentage yield.
Yeah.
Can you explain that?
For sure. The interest rate, it's simply the percentage they're going to pay you on your money. The APY, it factors in compounding. So imagine your interest is calculated and added to your principal multiple times a year, like monthly or quarterly. So the next time they calculate it, you're earning interest not just on the original amount, but also on the interest you already earned. That's compounding. And because of that, the APY will usually be a little higher than that stated annual rate.
Yeah.
There's a good example in our source, too. A 3-month CD, it's got a 5.023% interest rate, but a 5.15% APY. That slight difference is from that interest compounding throughout the year.
Nice. Now, safety is always a big concern when you're putting your money anywhere. How safe are CDs?
This is a big plus for CDs. Bank deposits insured by the FDIC, the Federal Deposit Insurance Corporation, they're protected up to $250,000 per depositor per insured bank. Credit unions, they have the NCUA, the National Credit Union Administration, same level of protection. So that federal insurance really makes your principal investment very safe.
Yeah, that's reassuring. It's interesting, though, the big, well-known banks, they don't always have the best CD rates.
Yeah.
Why is that?
Good point. Those huge banks, they have tons of customers, and everyone knows them.
Right.
They don't need to offer crazy high rates to get deposits. People go with them because it's easy or they're familiar.
Yeah.
Smaller banks and credit unions, they often use higher CD rates to attract new customers. So even though those big names are familiar, it can be worth checking out smaller places if you're really after maximizing returns.
Okay, so with all that in mind, who should be seriously considering a CD right now?
Our sources highlight a few types of people.
Okay.
First, anyone with a specific savings goal and a clear timeline.
Uh-huh.
And they know they won't need that money before the CD matures.
Makes sense.
Second, people who don't like risk. They prefer that stability and guaranteed return of a CD over the ups and downs of, say, the stock market. And lastly, in this economy, anyone looking to beat inflation. Like February 2025, inflation was around 2.8%.
Right.
And we've seen the top CD APYs are way higher than that. So you could get a real positive return on your savings.
It's not just one type of CD, though, is it? Our sources talk about different kinds.
Yeah, the regular fixed rate, fixed term CD, that's the most common. But there are others you might want to know about, like depending on your needs, variable rate CDs, their interest rate changes with market rates. Jumbo CDs, those are just CDs that need a big initial deposit, usually $100,000 or more.
Wow.
No penalty CDs, they let you withdraw early without penalty, but their interest rate is usually lower.
Makes sense.
Brokered CDs, those are sold through brokerage firms. They can have different terms and rates. Step-up CDs, those let you request a one-time rate increase if market rates go up.
Okay.
And promotional rate CDs, they offer a higher rate for a limited time, often to get new deposits in. Knowing these types can help you pick the right CD for your own financial plan.
So let's dive into the pros and cons. What are the clear advantages of investing in CDs?
Oh, they're pretty attractive. You get a guaranteed yield for the entire term, predictable.
Right.
Historically, they tend to pay more interest than regular savings accounts. Your earnings are predictable. You know exactly when you get your money back. They're super safe with that federal deposit insurance. And maybe not so obvious, but those early withdrawal penalties can actually help you. Keep you from spending that money.
Yeah, makes sense.
You know, on things you don't really need.
So what about the downsides?
The cons.
Yeah.
Well, the biggest ones are about flexibility. It's tough to access your money early without a penalty. Usually you can't add more money once you've opened it. So you can't save more in that specific account, right? And if interest rates jump up after you've locked in your CD rate, you might miss out on a better return somewhere else. And the other way around, if rates drop, you might wish you've gone for a longer term.
Yeah.
And over the very long term, CDs usually don't grow as much as, say, stocks.
Okay. So with all this to think about, how do you actually pick the right CD?
Right.
What should you be considering?
It's all about matching the CD to your goals, your situation.
Right.
Start with your financial objectives.
Mm-hmm.
Short term, long term.
Uh-huh.
How much can you deposit right now?
Yeah.
Do you meet those minimum requirements? How long can you realistically keep the money there?
Right.
Then compare those interest rates being offered for the term you want and the amount you're putting in. Look
Right.
at different banks, different credit unions.
Okay.
And lastly, think about those special types of CDs we talked about. Like if you need flexibility, a no-penalty CD might be better. It really depends on you.
Makes sense. So once you've found a CD that looks right, how do you actually open one?
It's pretty simple, usually. You'll need to give some basic info.
Mm.
Name, address, date of birth, social security number. If you're not already a customer with them, you'll probably need an ID. You'll also say how you'll fund the CD,
Okay.
usually an electronic transfer from another account. Then you deposit the money and choose how you want your interest payments.
Right.
Options might be back into the CD,
Mm-hmm.
into another account, or even a check.
Okay. Now, our sources also mention some advanced stuff like building a CD ladder.
Yeah.
Can you explain how that works?
A CD ladder, it's for balancing those higher rates on longer CDs, but still having some of your money available regularly. You basically split your savings across a few CDs, each with a different maturity date.
Right.
So say you have $25,000.
Okay.
You could put $5,000 each into CDs with terms of 1 year, 2 years, 3 years, 4 years, or 5 years. As each one matures, you reinvest in a new CD with the longest term on your ladder. So in this case, a new 5-year CD. That way, you have some money becoming available every year,
Mm-hmm.
but you still benefit from those potentially higher rates on the longer ones.
Makes sense. Let's go back to those early withdrawal penalties for a minute. Our sources give an example of how they can work.
Right. So imagine you put $10,000 into a 12-month CD, 5% interest.
Okay.
Now you need to withdraw it after 6 months.
Mm-hmm.
You might get hit with a penalty, maybe 3 months worth of the interest you've earned.
Ouch.
So instead of getting the full $500 interest after 12 months, that early withdrawal eats into your return.
Right.
Something to consider if you might need the money early.
Yeah. And we've mentioned no penalty CDs, but they usually have lower rates compared to regular ones.
Right, exactly.
Okay, so taxes are another big factor with any investment.
Uh-huh.
How's the interest on CDs taxed?
Pretty much like interest on regular savings or money market accounts. Taxable at federal and state level in the year you earn it, even if you don't take the money out till later. Important to keep that in mind for your financial planning.
Are there ways to get tax advantages with CDs?
Yeah, one way is to hold them in retirement accounts, like a traditional IRA or a Roth IRA. In a traditional IRA, the CD interest isn't taxed until you withdraw it in retirement.
Okay.
With a Roth, if you meet the rules, those withdrawals in retirement, including the interest, are usually tax-free because you contributed with money you'd already paid taxes on.
Right.
But remember, even in an IRA, if you take the money out early, you might get hit with both the CD's early withdrawal penalty and tax penalties from the IRA, depending on your age and the rules of your retirement plan.
Yeah, good point. So to give people some more options, what are some alternatives to CDs they might want to look at?
There are a bunch. Traditional savings accounts, they're easy to access, but usually lower interest rates. High-yield savings accounts, they aim for more competitive rates, but still pretty easy access. Money market accounts, their rates are often similar to high-yield savings.
Right.
And sometimes you can write checks on them.
Oh, nice.
If you're okay with a bit more risk, there are bonds,
Uh-huh.
government bonds, corporate bonds,
Okay.
brokerage accounts, you can hold cash there, or invest in money market funds.
Hmm.
But their yields might not be as good as CDs. Annuities, they're long-term for steady income later,
Right.
often for retirement planning. And then you've got treasury bills, short-term debt from the U.S. government, another way to earn interest.
Okay, to wrap it up, let's hit some key takeaways.
That was good.
Who has the best CD rate right now?
As of March 21st, 2025, it's Mountain America Credit Union. That 5.00% APY on their 18-month CD.
And are CDs safe?
Very safe. You've got that federal deposit insurance from the FDIC for banks, NCUA for credit unions, up to $250,000 per depositor per institution.
How have CD rates changed over time?
They usually follow the Federal Reserve's federal funds rate.
Uh-huh.
Fed lowers rates, CD rates usually drop. Fed raises rates, CD rates usually go up. We saw a big jump in CD rates when the Fed was fighting inflation, tightening things up.
Right, right. And why are rates relatively high now?
Mainly because the Fed's benchmark rate, even though it's down from its highest point, it's still at a level that shows they're trying to control inflation. Compared to the past, the CD rates we see now are pretty good.
Now, are there usually fees for opening or having a CD?
Not usually.
Okay.
No direct fees. But some credit unions might ask you to become a member. That might mean a small deposit or a tiny donation.
Okay. And what kind of terms can you find?
Usually you can find anything from 3 months to 10 years.
Okay. So, with everything as it is now, is it a good time to get a CD?
Based on what we've seen, yes. CD rates are pretty high right now. Locking in a CD now could be a good idea
Right.
before rates maybe drop.
Okay. Last one. What's a jumbo CD?
That's a CD with a minimum deposit of $100,000 or more.
Okay. So, bottom line, CD rates in March 2025, they're looking pretty good if you want a safe, predictable way to grow your savings. For a set period, of course. But we've said it throughout, the best CD for you depends on your goals, how much you can deposit, how long you can keep the money there, and whether you're okay with those early withdrawal penalties.
Exactly. We've given you a snapshot of the CD market as of March 2025.
Yeah.
Things change, obviously, but this info gives you a starting point for making smart decisions. Definitely check out those institutions and CD terms we mentioned. See what fits your situation and goals.
Yeah, good advice. And here's something to think about. With the economy the way it is, where could a CD fit into your overall plan? Is locking in a guaranteed rate now worth it, even if it means you can't access your money for a while? That's worth considering as you plan your next financial moves. Thanks for joining us for this deep dive on certificates of deposit.
See you next time.